2024, we have a CPI of 313.548 divided by a $30 top. We have the ratio of 10.5. So 10.4, 10.9, 10.5. Does that mean we reach $50 by 2025? I think so. And I think this time we will go way beyond that because we're in end game territory here. Once we hit 50, we will keep going. And I think the move from 50 to like say 250 is going to be a lot quicker than the move to break 30, which took 4 years and counting, and it is going to break. The conclusion is the $30 triple, quadruple, whatever top makes all kinds of sense, and it is going to break.
Last week, the silver market experienced its strongest performance since early April, driven by significant U.S. economic indicators and shifting expectations regarding Federal Reserve monetary policies. According to some analysts, silver is just getting started as the precious metal has solid momentum. Renowned publisher of the Endgame Investor Rafi Farber delves into the significance of the triple top at $30 for silver, explaining why it makes so much sense. He argues that this triple top is a critical indicator based on historical patterns. By comparing past CPI-to-silver price ratios from 1978 and 2010, he demonstrates a consistent relationship that suggests silver will likely reach $50 by 2025. According to CNBC reports, silver prices could soar to their highest level in a decade. The Silver Institute forecasts global silver demand to hit 1.2 billion ounces in 2024, driven primarily by robust industrial usage. Due to strong demand, silver prices are anticipated to reach $30 per ounce, last seen in February 2013. However, Farber's confidence is evident as he asserts that breaking the $30 barrier will trigger a rapid increase, potentially driving silver prices up to $250. Despite various market uncertainties, he firmly believes that this historical pattern positions a crucial predictor for future price movements in the silver market. While shifting focus to the next aspect, Rafi Farber highlights that China is accelerating its sale of U.S. treasuries, reaching unprecedented levels. Beijing offloaded a total of $53.3 billion of treasuries and agency bonds combined in the first quarter, according to calculations based on the latest data from the U.S. Department of the Treasury. Belgium, often seen as a custodian of China's holdings, disposed of $22 billion of treasuries during the period. Now, we present the clips of Rafi Farber's insights from his recent video with Arcadia Economics. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
This is where I wanted to get into the triple top at silver at $30, why it makes so much sense. So the first part of this we went through last week. I'm going to add another prong to the fork. It's now a three-pronged fork, like, you know, those forks that have 3 prongs on them. Sometimes you use them for spaghetti. Here we have 1978. I showed you last week, or maybe it was 2 weeks ago, it was one of these weeks, that there was a triple top at $6.50 from 1974 to 1979. It could have been a quadruple top, depends exactly how you count it. Triple, quadruple, whatever. The CPI in 1978, when it hit 650 in November of 1978, before it broke through, was 67.4 points. That's the CPI measurement. And we all know that the CPI is 100% dead on accurate. And anyone who badmouths the CPI, well, he can just... I wanted to add here. So we have 67.4 relative to a $6.50 top. And now in 2008, and I'll show you this chart in the next slide here, the CPI was at 218.178. You have to be very exact here because the CPI is an exact science. Trust the science, people. It's very trustworthy. So May 2010, the last time when silver hit a triple top or a quadruple top of $20, chart on the next slide, you'll see the CPI was at 218.178. Now keep that in mind. See here the chart of silver during the triple top of 2008, 2009, that led it to the spike to $50 in April, or was it May, April 30th, I think it was at the very end of April, when silver just touched $50 over here, you can see. So before that, in the year and a half leading up to that, we had a triple top at 20. Could have been quadruple if you count this as 2. Do it however you want. This is not an exact science, even though it is. Trust the science. Now we all know that silver has been touching and going with $30 for some time now, since 2020. So we're at 4.5 years, 4 years, something like that. So CPI during silver $30 triple top. Where is the CPI in points now? It's at 313.548. And now we're going to do some math. Remember that first chart? We said that the CPI was at 67.4 at a $6.50 top. The ratio of CPI to the silver top at that time in 1978 is 10.4. And we reached $50 by 1980, so it was November 1978 to 1980. It's about 14 months ahead. So 2010, the CPI was 218.178 divided by $20 top, triple top, quadruple top in silver. The ratio is 10.9, very similar to 10.4. $50 was hit by 2011. After the late 2010, the triple quadruple top at 20. So not many months after that. And now 2024, we have a CPI of 313.548 divided by a $30 top. We have the ratio of 10.5. So 10.4, 10.9, 10.5. Does that mean we reach $50 by 2025? I think so. And I think this time we will go way beyond that because we're in end game territory here. Once we hit 50, we will keep going. And I think the move from 50 to like say 250 is going to be a lot quicker than the move to break 30, which took 4 years and counting, and it is going to break. The conclusion is the $30 triple, quadruple, whatever top makes all kinds of sense, and it is going to break. China is selling treasuries. The pace has accelerated to an all-time high. We have here monthly increase or decrease in treasuries and agency securities. Treasuries are, of course, the bonds that are issued by the federal government, and agency debt are bonds issued by Fannie Mae, Freddie Mac, other government-sponsored enterprises, aka fascist institutions, where you have a union between corporatism and state, which leads to fascism. But let's not say that because it's not nice.
During the interview, Rafi Farber warns of instability in bank reserves, hovering around $3.37 trillion, with a critical threshold near $3 trillion. He cautions that breaching this mark could spark another banking crisis, especially with seasonal declines in money supply. According to the Jitong Finance and Economics app, the amount of bank reserves in the banking system, a key factor in the Federal Reserve's continued contraction of its balance sheet, has seen the largest decline in 2 years due to Americans using bank accounts to pay their tax bills. The Federal Reserve's reserve balance at Bank of America has seen its largest decline since the 2022 tax season, losing $286 billion in 1 week. This has raised concerns among market participants and policymakers as reserves become increasingly scarce. Farber cautioned that the Fed's bond portfolio losses could fuel hyperinflation, drawing parallels to Argentina's economic crisis. Meanwhile, he mentions that failure to address these issues promptly could lead to severe consequences, including hyperinflation. Let's get back to the interview.
First things first, bank reserves this week are stable at about $3.37 trillion. They've gone slightly up over the last 2 weeks, but not much. The red line here where we are going to hit another banking crisis is somewhere around the $3 trillion mark, so we're $370 billion away from that. There are going to be drains going through August, as this is the seasonal time where money supply tends to decline into the summer. The last time we hit a monetary crisis or a banking crisis was at this line in March 2023. It should be slightly above that, the red line, where the next crisis is going to hit. And this is why the Fed is planning to slow down quantitative tightening in August or June or one of those months. I think June, actually, they're going to slow it down, but they're still going to do QT, but at a slower pace because they don't want these bank reserves to fall below wherever they were, around $3 trillion when the last banking crisis hit, and they're trying to be careful, but they're going to hit it anyway because, that's what they do. Meanwhile, the balance sheet is still draining. Last week, we drained another $49.136 billion. That is the most since about February. Yeah, since February. It might be a little bit more than that. So if it's more than February, then it's the most since December 2023. The biggest drain since then, we're at $7.3 trillion. That's somewhere in early 2021. We're going to hit the crisis line. We just don't know exactly when, but the monetary base is still draining, making it more and more precarious for the banking system, which will eventually hit a wall or a tsunami or whatever you want to describe, whatever it is they're going up against, which is not good. The Fed, meanwhile, is still losing money every week on its bond portfolio and operating loss. And this is the back end of what causes hyperinflation. a central bank that loses money, they try to say that it doesn't matter and it doesn't affect monetary policy. Well, if it doesn't, well, then balance sheets don't matter and they can just like invent whatever money they want and just put it in the economy without backing with any asset, which is a bunch of crap. These losses will continue. We have now $168.899 billion that are losses that are backed by deferred assets, meaning nothing. This, by the way, is what causes hyperinflation in Argentina because its central bank buys IOUs from the treasury, which are worth nothing on the market, and issues currency. So they are at a loss because those assets that they get from the parliament or the Argentinian government, this is before Milei, they aren't worth anything. And so the Argentinian central bank is at a severe loss, which is what causes hyperinflation on the back end. It takes a while to kick in, and it's coming.
As we move into 2024, investors must remain vigilant and adaptable to capitalize on opportunities while mitigating risks in the ever-evolving silver market. Bullish projections and optimistic forecasts may suggest a promising year ahead for silver, but it's essential to acknowledge the complexities and uncertainties in the market. What's your opinion on the recent surge in silver prices? And what factors do you think will keep pushing them up soon? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.